reoccur in the Indian equity markets. So clearly market regulator SEBI in that sense has taken and acted proactively. They have, as we had told and reported, had this round of discussions with top NSE officials, and after that this comprehensive press release has been issued. And also I need to tell that also a brief preliminary report has been submitted to the Finance Ministry highlighting the whole developments and what direction they have given to NSE's top management after today's meeting, and subsequently a detailed comprehensive review would also be submitted to the Finance Ministry. So clearly the FinMin also is being kept in the loop. So clearly market regulator SEBI is doing everything possible to ensure and handle this situation and to ensure that the nerves are soothed when the markets open tomorrow, and clearly they are saying they will do whatever it takes to ensure such an issue doesn't reoccur in the Indian equity markets going forward.
You know, Vijay, this was a technical snafu that sort of spelled a whole lot of chaos on trading floors. And, you know, even when we visited dealing rooms, a lot of brokers, dealers were rather puzzled whether it was about delayed rates or even, you know, display prices. Now, SEBI in its press release had said that all executed trades in cash and F&O segments remain valid. So, you know, this is definitely a big sigh of relief of those who were sort of wondering whether their trades were punched in or not and whether or not they were executed, right?
Absolutely, Tanya. Why this is important? Because as we have been reporting, and as I specifically mentioned in the second half of the day, as the NSE got back to action around 12:30 p.m. Market regulator SEBI was very concerned when it comes to settlement, because settlement is one aspect which Indian markets are known for when it comes to settlements and the credibility with which the exchanges do the settlements in the Indian equity markets. That is where market regulator SEBI was very clear that they wanted everything in place to ensure that as and when NSE starts its terminal, there is no issues that crop up. And that is why perhaps that 3 hours which NSE took, now in hindsight we realize why they took their time and why market regulator SEBI was keen on ensuring that when the systems were operational, clearly there were no further glitches on the technical aspect. Having said that, that is where SEBI is once again gone and retreated that settlements and all the trades placed have been honored, and clearly that is where a pre-opening and also a cancellation slot was given before it was open into at 12:30 p.m. So clearly market regulator SEBI is not only ensuring that it goes by the book, but also ensured that this crisis also things were put in place, so clearly sending out a message that when it comes to even such situations, Indian equity markets are capable of handling these situations. Of course, in hindsight, there will have to be policy decisions perhaps tweaked when it comes to dealing with such cases. Perhaps an interoperability going forward can be allowed between depositories.